Hello, and welcome to the Wade Borth podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. Welcome to the Wade Borth podcast. Today, I have a very special guest with me today, author and one of my great friends, Mary Jo Irmen. Thanks, Mary Jo, for joining me.
Welcome. Thanks for having me.
Well, I think you bring up a really good point. And again, we segue to so many different ways. So hopefully people are keeping up with us and but this is, let's talk real quick. If you have 10 more minutes, let's talk real quick about your books.
Okay. What do you want to know?
So share with me, Farming Without the Bank, huge hit, huge success.
Yeah. So I have written 2 books in very simple language. I have basically taken Nelson's book and put it in English I'm telling you what to think about, so you don't have to think about it. It is not a replacement. Neither one of my books are replacements to Nelson's book. And so I wrote Farming Without the Bank is my first book. And I just basically wrote that because farmers told me I didn't know what I was talking about and that this wouldn't work. And I didn't know what they were doing. And I said, oh, but I do. You're just being stubborn. And so I'm going to make you read the book. Stubborn meets stubborn. And so I'm not talking to you until you read the book. And so I wrote Farming Without the Bank, which has been, yes, a very huge success. I've sold well over 10,000 copies, which apparently is a big deal. I did not know this. Apparently it's a big deal if you are a self-publisher, because I do not sell them on Amazon. Only my website is where you can get my books.
Which is?
farmingwithoutthebank.com.
Thank you.
Or you can go to withoutthebank.com as well. And then I wrote Life Without the Bank, which is for non-farmers, because a lot of people are like, well, I don't farm. You don't have to farm to get it. But because farmers deal with so much money, everything in Farming Without the Bank is large premiums. And it's a little bit, it's
overwhelming.
It can be a little bit overwhelming if you don't know to just break it down. Even though I tell you that in the book, it still is very overwhelming to people. And so I wrote Life Without the Bank, basically for non-farmers, blue-collar business owners, blue-collar workers. Those are my people that I love to work with. I obviously have doctors and those sort of people as well. But even my doctors tend to be farmers, or they have like horse farms or something like that. They're not just, oh, I'm going to go play golf. Those are not typically my kind of people. And so that's how the books came about, just because I was trying to get it across. Nelson's book is big, right? It's not a lot of pages, he used full pages. He used an 8.5 by 11 sheet of paper. And so it's a tall book. Mine is very short. It's like half the size of Nelson's. And so people are like, oh, I got to read less. No, in reality, it's the same amount of pages. You're reading the same amount of content. Mine's just smaller. So you have that. But people weren't understanding Nelson's. They wouldn't read it and go, oh my gosh, I get it, like you did. They would react like Lynette and I and go, I don't get it. Like, I get it, but I don't get it. And I don't know how to apply it. And so my book is just there as a guide, sort of, an introduction.
I would think, this is my observation with your books. I remember when you wrote it, I was like, man, this is going to be good. I was so excited. Nelson's, you said the book is big. And I would say that's big from an idea standpoint as well. Because he takes that first step of changing your paradigm, which is hard. That is, people are just ingrained in their paradigm, and it's hard to get people out of that. And so with your book that comes along is, let's break this down from a practical standpoint. How can we use what Nelson's teaching us? And I love in your book too that you give credit to Nelson and say, I think a good pairing would be read Nelson's book and then say, if you understand what Nelson talks about, especially in the very beginning, the human problem, because he addresses that problem very strongly at the beginning of the book, and this is the real problem. And then he gives one example. He gives more than one, but he gives a great example with the financing with his nephew's logging business. But you just take it one step further and you say, here's another example. Here's another practical way to use what Nelson was talking about. And talking to some of your clients and being at some of your conferences and listening to what they're talking about, they're just, it's so easy for them to relate to what you wrote in your book. And that's because your farming background, your passion to keep the family farm inside in the family, because I've heard you say it many times. That's your ultimate goal, is that why are the family farms having to be refinanced every time there's a death in the family? What
Yeah.
if we could do that and pass it from one generation to the next without having to buy it again? And who profits from that? Wells Fargo.
Yep. Yep. The bank's the one making money in those transactions, and we're losing family farms along the way. And I
Yeah.
don't care if it's a family farm or a big farm or whatever, but the big farmers are surviving because they're planning and they're doing it correctly. And the little farms are not surviving because they're not doing it correctly.
Yeah.
They're not planning, they're not educating the next generation. They have a stinking thought process, whatever it might be. There's a lot of reasons why farms are going under. But at the end of the day, the way we finance our farm, and we've done it this way for 103 or 4 years now, it has to change, or we're not going to have farms, and we're going to just have the big guys. And so that industry as a whole can be a challenge because that's the way it's always been done. That's the way we're going to do it. They tend to be very stubborn, very independent, which is why they own their own businesses and work by themselves. There is not a lot of it's I'll just do it myself because I can do it right type of mentality. And so getting through to them takes a fairly special individual. And I seem to be that lucky one. Because I am equally as ornery. If you're going to tell me that I'm going to challenge you and I'm going to come right back at you, not out of ego, but out of pure, I want to know, why do you think like that? If I have a client that says, well, I rented the land, I get to rent the land for mom and dad. And then when they die, I get to buy the farm. You get to buy the farm. Oh, kudos. You already bought it through rent, and now you get to buy it again from the siblings. So we just bought it. This absolutely doesn't make sense. Why are things falling apart? Why are people committing suicide in that industry? Same thing. I don't care if you're selling your business. If you're listening to this and you're a business owner and you are selling your business, or you're going to leave the business to one of the kids, but he gets to rent everything in the process. Really? If he's providing you income because your retirement was the sale of the business, then or let's just say that you have a business and you stay part owner of that business, but you don't work in that business, but you're part owner of that business because that was your retirement plan. Should the kid that then inherits it and buys it from the other family member, should he not get to take that off of the purchase price? Because he basically worked for your retirement. That's what we're doing in a lot of these industries, and we just don't think about it because that's the way it's always been done.
Yeah, and the funny thing is, I remember down in a farm show in South Dakota that we worked, this really came to hit me across the head, right? So the guy was telling me how much more efficient the farming practices are because of all the GPS. He said, and his point was, man, it's so expensive, but he says it's so expensive not to do it.
It's expensive to have employees too.
But his point, which really came across to me, is that we changed our farming techniques all the time. We get to modern day use of farming techniques, but we won't think about a modern day of why do we have to pass the family farm? Because that's why grandpa did it and that's why great grandpa did it. Was it the best way? No, it just worked at that time, but it doesn't necessarily mean it was the best way. So why aren't we keeping up with modern times? How do we change this vicious cycle about transferring farm from one generation to the next?
I think you're referring when I say we finance the farm like we did 100 years ago, but we don't farm like we did 100 years ago.
I think that was in your presentation down there.
Mm-hmm. Yeah. And it's a valid point. We don't farm like we did 100 years ago. And so why are we still financing it? We pay attention to advancement in farming, but we don't pay attention to money, which is the biggest part of our operation, is the cash flow that goes through it, not the equipment that's in it. But even on the equipment side of things, if you're a big operation, that makes sense. You need to have your own equipment. My family farms 8,000 acres. They need to have their own equipment. That unless there's a custom combiner or something that comes through that for whatever reason they need somebody to custom combine. But these smaller operations, 100 acres, 1,000 acres, 500 acres, depending on where you're at. That's not even your full-time gig farming. You're typically working off the farm. I have guys that are farming 40 acres. What do you need your own equipment for? Why don't you go and rent the equipment from the neighbor guy who does have that piece of equipment? Or why don't you hire him to come custom do it? It's probably cheaper than that tractor payment and or the repairs on that tractor and the seeder and the combine and the sprayer and everything else that you need. And so the only one making money is the bank, John Deere, and Case IH. Those are the three, and probably New Holland at this point. But those are the three that are making money because everybody thinks they need their own stuff. Yeah. Nelson used to say, why does everybody want a combine? It sits for 9 months out of the year. They're making payments on a combine that they only use 3 months out of the year. And it really does get you thinking. It's a matter of how can we do it without all that expense? Yeah. Would it be cheaper to have custom combiners come in? Sometimes it's not. But does the neighbor have a combine and he's only farming 1,500 acres and I've got 40 acres and he's got plenty of time to combine my 40 acres? Or do I have to buy ground to have cattle? This is a great one with my cattle producers. Do I actually have to buy the ground? Or can I just rent the ground and have my own cattle? Or better yet, can I rent the ground and custom graze for somebody else who owns the cattle? I don't own anything. I just keep making profit until I have enough profit that I can have a down payment on my own stuff or I can buy my own stuff. But we all think we need to own it before we can do anything. It's like saying, before I can have a rental property, I need to have all the cash. I have somebody right now that I know that they won't build a house until they have all the cash to build the house. Oh my God, 25 years later, we still don't have a house. 25 years later, because we do not want a bank loan on the house. Go get a loan. Go get yourself a loan. Build yourself a house. You have a loan. The money you were putting in savings to save for the house, guess what? Is the payment on the house. Yes, I understand not wanting to pay interest, but how much money? We've got probably $400,000 sitting in savings doing what? It's not creating any cash flow. They could have used that over the last 25 years to create cash flow and had 15 houses.
Buy assets that generate cash flow. You go back to Robert Kiyosaki, how we started this company. So, because and then the other side of the equation is, if all you're going to do is cash, then what is your plan to pay it back? Because again, you finance everything you do. So why not fund your policy and get to the point where you can buy your house and then make that payment back to yourself? Again, it's about an ingrained way to think, right? We've been conditioned to think a certain way. One of those ways I want to touch real quick with you, if you allow me this, the idea of, because you mentioned who makes money, the banks, Case, New Holland, John Deere, right? The idea of, well, I need to buy a piece of equipment to save money in taxes.
Really? Do we have enough time to address that subject?
Well,
that's not enough.
But and again, this is just one of those things I hear as a comment that, like, who's driving that narrative? Who's making a truism? Mm-hmm. I have a personal belief.
I can't even blame the banker.
No, I blame the accountant, and I blame John Deere, and I blame
the farmer for not paying attention. Everybody has here's what I say. Who wrote the check? If you are the farmer and you go to your accountant and the accountant says, "Oh, Wade, you need to buy something to avoid taxes. You need to go buy $100,000 piece of equipment so you can save $15,000 on taxes, or 20, let's just say 20,000, easy numbers. So you need to save $20,000 on taxes. So you go buy a $100,000 piece of equipment. And then you go to the bank and you go, "Oh, Mr. Banker, can I borrow $100,000 so I can save 80 or so I can save 20?" And the banker says, "Oh, by all means, absolutely." Or you go to John Deere, whoever's financing it. Then commodity prices drop and all of a sudden you can't make that tractor payment. And you say, "Oh my gosh, I can't make this payment. The banker should have never lent me the money." Oh, no. The banker shouldn't have lent you the money? You wrote the check. You need to pay attention as the farmer, as the business owner. If you're buying things to avoid taxes, you need to pay attention to what is happening. It is not your accountant's job to run your operation. It is not your banker's job to run your operation. It is your job to run that operation. And if you are not planning for down markets, Nothing is up. The stock market's not up all the time. Commodity prices aren't up all the time. The dollar value is not up all the time. Everything is cyclical. And if we are not planning for the bottom to happen, we should not be buying it at the top. The other thing is to look at the numbers. When I run the numbers on a piece of equipment, and now we aren't talking like $100,000 piece of equipment. If farmers are listening to this, they're going to laugh and go, Mary Jo, you don't know what the hell you're talking about. It is numbers, people. I understand your tractor is $500,000. And so if you're going to go buy something for $100,000 is what I used in my example, and you're going to pay 4.5% interest on that. And let's say that piece of equipment, they're going to take it out probably 7 years is typically what they amortize a piece of equipment. The interest, most times, the interest over 7 years is nearly exact to what you saved on taxes. So all you did was you saved money on taxes and you took that money and you reverted and used it to pay whoever the lender was. I don't care if it was a bank, Case IH, John Deere, whoever. And then they'll say, Mary Jo, no, the equipment's 0%. The equipment is not 0%. They are wrapping that up into the cost of the equipment. That is I don't care if you look at it in inflation, whatever it is, it's not 0% for 5 years or whatever it is. They would go out of business. Nelson always said, Iacocca said the biggest money maker in Chrysler was the fact that they financed cars. And had Iacocca realized that, they would have done it sooner because it would have saved the company. Yeah. That is where they make their money, is financing. They're not financing because they like you. They're financing because they're making money there. And so when we are buying things to avoid taxes, it is not, who's that helping? Oh, but I paid cash for it. Great. Now you gave up, if you have a $100,000 piece of equipment to save 20, now you gave up $80,000. What could have you done with that $80,000 that could have created cash flow that would have been more than the 20, that could have created more money than the 20% that you would have just paid the IRS? Right. Now, don't get me wrong. I hate paying taxes. It is the most painful thing that I do. But at the end of the day, there are times where we just have to pay the taxes because we're either going to pay the taxes or we're going to pay the banker. And then you can't come back to me and say that you hate your banker.
Yeah. We see so many times people stepping over a dollar to pick up. And that's really what you're doing when you're doing that process. So I'm going to spend this $1 so I can save a dime or 20 cents or 2 dimes or whatever it may be.
Yep.
So, Mary Jo, thanks so much. I appreciate
You're welcome.
Your time. Maybe we'll do this again. This was fun. So just real quick, if people want to get access to your book, it is farmingwithoutthebank.com or withoutthebank.com. Yep.
And you cannot meet with me or call me unless you've read the book. So first step is
grab the books you're reading. Read Nelson's book too.
Yes. They come in I sell them on my website as a package. Yeah. So get both of them at the same time.
Perfect. Thank you so much. Appreciate your time.
You're welcome.
Bye-bye. If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button and please leave a review. This will help this podcast reach and help more people by ranking higher in searches and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.